And welcome back to the show. I'm your host, Lance Roberts. In studio with me right now, Richard Rosso, certified financial planner as well. And on the phones with us is Mike Shedlock. A lot of people know him as Mish Shedlock from SitkaPacific. Also, you see his writings pretty much everywhere. Writes for themaven.com and a whole variety of other things. Mike, welcome to the show, sir.
Oh, a pleasure to be back on. All I can say is, what took you so long to have me back on? I enjoy the show.
I appreciate that. No, glad to have you here. We'll definitely do it some more. You've been writing a lot here over the last few days about tariffs and trade wars, and of course, the market's obviously not really liking what Donald Trump proposed today. This $50 billion kind of battle against China. Just from the surface standpoint, I think most people intellectually know that trade wars are not good for economies. But in your opinion, why do you think that the current administration is so bent upon doing something that has a negative outcome to it?
Well, I believe they believe what they're doing. I believe they believe they can win wars. And it's not just the Trump administration. Some writers for Financial Times wrote a piece yesterday that they believe that Trump can win a trade war from Europe. But I have to ask, what does winning mean? Who wins a trade war? Let's take the point of view that China is giving us solar panels for free. Now, actually, the World Trade Organization came out yesterday and sided with China on this, and so do I. But let's assume otherwise. So let's assume that China is giving us these solar panels below cost, dumping them, if you would. The U.S. would be crazy not to take them. We take these solar panels, we install them on roofs. China is essentially subsidizing U.S. consumers if they truly are giving us these solar panels below cost. Mm-hmm. So what are we going to look at it this way? Let's look at the manufacturers. We might save 1,000 jobs or 2,000 jobs in solar tariff manufacturing here in the United States at the expense of tens of thousands of contractors who might want to install these things on buildings and are, in fact, installing them on buildings in areas where there's lots of sunshine. It's a horrendous trade-off. You're complaining about getting something below cost. That's how crazy it is.
Well, I think what you said earlier about how what does winning the battle mean, right? So we're going to have this war, but let's just assume for a moment that we can actually win a trade war with China. But if we win a trade war with China, but in the process sink the U.S. into a recession. Because of this, when we start this trade war, we're going to drive up the cost on consumers on a lot of products that they utilize. The retail sales have been negative for 3 months in a row. We haven't seen that other than 5 times since 1992. Each one of those times preceded either a recession or you were in one. So there's not a lot of flexibility for consumers right now. So if we win the trade war but drive the U.S. into a recession, what did we win?
Well, that's exactly right. I was thinking about this today, and I said, what does it mean to win? And nobody ever said. I've never heard Trump say. I suppose what they mean by winning is we will get jobs back in those industries. Okay, so let's talk about steel here. So we're going to win the trade war. We're going to bring these steel jobs back. First off, I don't believe that's going to happen, but let's presume that it does. But it's at the expense of all of the U.S. manufacturers that use steel, especially the car industry. Mm-hmm. So for every job we gain in steel manufacturing, if any, I believe it's a negative proposition. But let's just look at their side and accept that we're going to gain some steel jobs back. It's going to be at a greater expense elsewhere. That is all I can figure out.
Well,
Every American,
what winning means.
And what Mish laid this out, every American is going to pay for these jobs. We're going to subsidize those because we don't want to pay the prices. Toyota came out and said, hey, we're going to raise car prices by $400. And for what consumers are going through today, $400 is a lot. So are we going to be willing to take back or reduce our standard of living for what we're going to gain?
Right.
Well, it goes beyond that. Toyota was on the verge of, I forget the state, I'm going to say Tennessee, of expanding its car building operation here in the U.S. Okay, that would seem like a win to me. We have foreign direct investment coming in to the United States, building plants, employing real people. No, we don't want that. Let's put a tariff on Japanese cars. You know, we have cars coming into the U.S. We've got ship dock workers unloading them. We've got truckers driving, delivering all of this stuff. We're not going to gain jobs by shutting off trade. The idea is crazy, but this is the path we're on. Look at the market reaction both yesterday and today. We had the FOMC announcement. The Fed hiked 1/4 point as expected. The stock market started rallying. Guess what? By the end of the day, the stock market was in the red, and Treasury yields came down. And look at the market reaction today. The stock market was down enormous, and Treasury yields sunk again. This is a curious thing. Everyone is believing that inflation is coming. I'm looking at all of this. I'm sensing a collapse in the price of assets. I believe inflation is in the rearview mirror, provided you know how to define it.
Well, and
Good
again,
point.
and you've also seen the fact that the global impetus, right? This whole thing, this whole premise of this inflationary push, and the bond bull market was over,
right?
Because interest rates were going to surge higher. Never really made sense, because if interest rates do surge higher, everybody that borrows money can no longer borrow money because they can't afford to make the payments, which slows your economic growth, since we're completely being run by debt now. But more importantly, now that whole global impetus has now rolled over as well. So we're seeing slower economic growth around the globe, not just domestically. And to your point, we're talking with Mish Shedlock right now on the phone. But to your point, Mike, earlier, I think you made a great point about these manufacturing jobs. And just to put some numbers on it, if we want to save the 200,000 manufacturing jobs that we're talking about risking over 2 million jobs of the subsequent companies that depend upon steel for manufacturing some sort of good.
Exactly, it's about 10-1,
Yep.
Or higher. But you can pick numbers out. Even if you believe it's 3-1, it's a bad deal, right? Yeah. So we're talking about degrees of badness here in terms of how the markets can react. Now, there was also an announcement today. Well, maybe Trump won't put steel tariffs on Canada. Okay, it's just going to be on China. We get almost no steel from China.
Yeah, no.
So what is the point of all of this?
Yeah. Hey, Mike, hold on for me real quick. I've got to jump to a break. Now, so I want to change gears here just a little bit with you. So we were talking about the trade wars, and the question was in the last segment was really kind of who wins the trade war. And we were talking a little bit about the impact to the economy and to the consumer here in the United States. I was having a debate with the morning show host on the station this morning, but he was looking at it simply from a political victory. In other words, what can we win politically through a trade war? And is there really, but winning a political victory, is that almost like a pariah where you win it, but you actually lose in the process?
Well, let's look at the last election. Let's step back then.
Okay.
And I actually wrote on my blog, this was heading into that last debate. It was really disastrous, actually, for Trump. But I was looking at what he was doing and what he was saying. It was clear that he was targeting the Rust Belt states of Ohio, Indiana, Pennsylvania, and Michigan. And I looked at that, and all of these states were projected to go to Clinton. And I looked at that, and I said, I don't think so. Right. I actually thought at that time that Trump was going to win. Then he had that absolutely horrendous last debate. I said, well, this is all over, but I still gave him a 45% chance of winning. I just didn't think it was likely. He got lucky. That report came out with Comey, changed things around, carried him to victory, but it was without a doubt the Rust Belt that did it. So look at who he's targeting here with these tariffs. He's targeting the steel manufacturing states.
Right.
He's targeting Indiana. He's targeting Pennsylvania. He's Michigan, which actually doesn't produce at least much steel, but is a user of it. Yet those blue-collar workers up there, I believe, support this. So what is he trying to do here? I actually believe that he believes this stuff, but let's say that maybe he doesn't. Then he also might be doing this to help out in these midterm elections coming up this November.
Right. Well, but isn't that? And so I was thinking about that too, right? Let's from a political angle. It's almost like a really big gamble here, right? So you're running this idea of trade tariffs. So, boy, we're going to bring manufacturing back to America. We're going to get all these manufacturing jobs back, and we're going to make America great again. Boy, we're going after those Chinese because they steal our technology. I mean, all those arguments, right? They're good political arguments. But isn't the real risk here that you trip? There's a lot of evidence this economy is already slowing down. We talked about retail sales a minute ago. There's a lot of other anecdotal evidence. The yield spreads are getting much more narrow. And if this 10-year Treasury continues to decline, we're really going to risk a potential for an inverted yield curve. LIBOR has been blowing out to the upside. There's a lot of stuff people are going, what the hell are you talking about? Here's the point about all this. None of that stuff is good stuff for the economy. No. So going into the 2018 election, if he throws this market into a big correction, doesn't that undo all of this work?
Absolutely, it does. And his main risk here is that there's a reaction now, and I believe it may have started. In fact, I'll say it probably has started. Mm-hmm. We're not going to know for sure, but even if you go look at some of the special elections that the Republicans were supposed to win, they lost this last one. Was it in Pennsylvania? I forget the state. So there's some negative stuff going on here. Let's just look at something slightly different, a different angle here. Let's look at mortgage rates. I got mortgagenewsdaily.com up here right on my screen as I'm talking. So I'm looking at 15-year mortgage rates. In June of 2014, they were 2.4% roughly. And we are heading close to 4% now. So, my gosh, that's a huge jump that lowers the affordability of what people can afford to buy. And speaking of affordability and what people can afford to buy, meanwhile, home prices are soaring. So not only are home prices going up, so are interest rates. Mm-hmm. Now, what about wages? Everyone's got their eye on wages. They're all looking, Lance. They're poring over these job reports every month for signs of wage inflation that they all believe is coming because of some nonsensical belief in something called the Phillips curve, which we don't have time to explain here. But anyway, it's a proven falsehood, yet Janet Yellen believed in it. Actually, Powell doesn't, which is sort of refreshing. That's our new Fed chairman. But anyway, everyone has this belief that inflation is coming, and they expect to see it on wages. Essentially, it's unemployment's going down, so that's going to put pressure on wages. Well, it hasn't happened, and I don't believe it will, but that's what they believe. Yep. So I went back, and I said, actually, just last week, we had a new report, the jobs report come out, and a couple of days later, with little fanfare, the BLS, the same people that produced the job report, came out and they said, real wages fell. Real means inflation-adjusted wages. So they're down. They're looking at averages here. Now, the problem with looking at averages is they're just that. But most of the wage gains that we've seen are not evenly distributed. Most of them are going to to the top managers or to the top employees, and very little, if any, is filtering down to the bottom. Now, the correct way to look at this stuff is how is the median person faring? And median means half the people make more than this wage and half the people make under this wage. There's data out there, but it's a year and a half, going on 2 years old. It comes out every May, and for the prior year. I went back, and it's by state, so I went back and downloaded, you got 50 states, and this goes back to 2002. I took 10 states, and I also took the national average and downloaded these states and that, a lot of downloads off of their site, and guess what? Median wages have fallen. Real wages have fallen in 7 out of the last 11 years.
Yep.
So people are losing money. Anyone who couldn't afford a home is not going to be able to afford it because they're getting further and further and further behind.
Right.
And economists are still scratching their heads, wondering why home sales aren't doing any better than what they are.
Right.
They're back to 1963 levels. For all the talk about home sales are up 3% or 2% or whatever numbers they come up with, new home sales are about at the pace they were in summer of 1963. That's really quite amazing considering the population gain we've had.
Wow.
So add it all up, and who's to blame for this? The Fed is to blame for this. Lance, you know it. I know it.
Sure.
The average economist doesn't even know what inflation is, so they're still looking for it. They don't even count home prices in their measure of inflation.
Right. No, it's fascinating. We were talking about employment. When they talk about these employment gains, I run a chart about once a month just to remind people that employment is a function of population growth. And since 2009, the population has grown by 22 million people, and employment since 2009 in total is 14 million people. So there's an 8 million person gap that are simply, and these are working age populations, 16 and older. There's 8 million people that are simply disappeared that are living off some form of government subsidy, but they're not working.
Exactly. And then, but economists look at this and say, oh my gosh, look at all these people that are being employed. The unemployment rate is down, so there must be wage inflation. Well, they've been looking for this for the last 5 years, and it hasn't happened. Janet Yellen's favorite comment was, we believe this is transitory.
Yeah.
Fortunately, we don't have to listen to her anymore. It'll be interesting to see what Powell says about this.
If he says transitory, I'm out. Hey, we're talking with Mike Mish Shedlock. Mike, thank you so much for your time today. We're up on a hard break. We're going to have you back here real soon, my friend.
My pleasure to be on. Have me back anytime. We'll have fun with this because this is fun stuff, even though we're getting screwed by the policies we see.
There you go. Thank you, my friend. Mike Shedlock. We'll be right back after the